then I suspect that the circumstance will resolve itself quickly, or more quickly at least, and the return to fortune that shareholders would enjoy at Franco-Nevada would occur more quickly.
Hey, gold and silver aficionados! Brace yourselves for an exclusive deep dive into the metals market. Once again, we have the esteemed Rick Rule with us. The expert unpacks the myriad bullish factors that are driving gold and silver surge, as well as how best to capitalize on those precious gains. Whether you're a seasoned investor or just dipping your toes into the world of precious metals, Rick Rule's insights are pure gold. Ready to navigate the currents of the metals market with a seasoned pro? Watch till the end. Where financial wisdom meets opportunity, let's uncover the keys to prosperity together.
What has changed is that one of the best political operatives in the mining business, Barrick, has entered into the scene, nosing around the larger First Quantum shareholders to see if there's room for them to make a takeover bid, and then utilize their political expertise to resolve the problem. It's worthy to note that not Franco, but Barrick has resolved political problems in Tanzania, in Congo, in Mali, and now in Pakistan. So one of their areas of expertise is politically challenged but extraordinarily large mineral deposits in the emerging markets. And I'm highly confident that should Barrick be successful in obtaining control, that they will ultimately be successful in Panama. I think actually that the circumstance in Panama will be resolved even with First Quantum in control, because the shutdown was clearly political and, according to international law, clearly illegal. The Panamanians really did an incredible move politically, looking, I guess, to pander to domestic political support. But they shut down a mine that generates 6% of GDP and 25% of export earnings, and is responsible for 40,000 direct and indirect jobs. Meanwhile, exposing them to an arbitration liability in excess of 10 billion US dollars. So my suspicion is that sanity will return over the next 2 or 3 years, even if First Quantum maintains control. If Barrick is able to get control of First Quantum and apply their own expertise to the circumstance, perhaps throwing the Panamanian government some form of fiscal bone, then I suspect that the circumstance will resolve itself quickly, or more quickly at least, and the return to fortune that shareholders would enjoy at Franco-Nevada would occur more quickly. Okay, I'll give you one. Don't try this at home, folks. I participated in a private placement over the weekend of a little dinky copper explorer called Chakana, Chakana. Let me give you the disclaimer at the beginning. This is exploration stage, which is to say it's more likely to be a mistake than it is a success. Chakana has a very, very, very high quality management team, and they have a deposit where they made a fairly small but very high grade breccia discovery. This is important because the Chakana market capital is about $8 million Canadian, and I think that their existing discovery could be sold for $8 million Canadian. So I think you're paying effectively nothing for the opportunity. The opportunity is that there's a very large gold in soils anomaly around the breccia, indicating perhaps porphyry mineralization, which is to say fresh rock gold and copper below the deposit rather than remobilized gold and copper. And it's a very, very, very large target. The company is raising, as I understand it, $2.2 million, which will keep them alive for a year or a year and a half and allow them to test this big porphyry. I believe that it is more likely than not that the test is unsuccessful, which is to say, I believe the outcome of this experience of this experiment is that I'll lose 25% of the money that I put up. If, however, they do make a discovery, and this is a highly qualified team, it wouldn't surprise me to see the stock increase 15-fold or 20-fold. And if you get a 20-fold return on investment, particularly with a full warrant, which this one includes. A 20 bagger becomes a 30 bagger or a 35 bagger, which means that your 4 cent subscription price pays you back, 80 cents on the stock. They're just absolutely quantum rewards for a less gamey circumstance. That is for investors as opposed to wild speculators. Parenthetical note, I'm both. I think you need to look no further than the North American oil patch. The easiest one, from my point of view, to wrap your head around is ExxonMobil, the finest capital allocator in the oil and gas business. Pays you a nice dividend while you wait. Most of the oil industry is underinvesting in sustaining capital. Exxon continues to make sustaining capital investments. While they make the sustaining capital investments, they're generating so much money that they are going to increase their distribution to shareholders by 14%. By dividends or buybacks, depending on which one is the most tax efficient. And they'll be able to do this for the next 10 years because of their sustaining capital investments. Meanwhile, they've made a series of exploration discoveries in the politically challenged jurisdiction of Guyana in South America. I say politically challenged because since this discovery has taken place, their broke neighbor, Venezuela, has begun to look covetously at their own oil and gas reserves. The U.S. Navy is in place just to make sure that Mr. Maduro, the Venezuelan dictator, doesn't get too covetous. So what's important about this is that there's 11 billion barrels recoverable, which is to say this is a discovery that's large enough to move the needle on Exxon. So if a little penny dreadful in Peru with a high probability of failure doesn't suit you, take a look at ExxonMobil. If you can afford a little bit more risk, but you still like dividends, take a look at the big U.S. natural gas stocks. I'm thinking in particular of Devon with production in the Permian and Anadarko basins, and Equitable with production in the Marcellus in the U.S. Northeast. And if you can afford a little more risk and have a little more time after that, look north of the border into the Canadian oil space. Look for ARC, A-R-C, which I consider to be the best managed of the Canadian oil companies. Look at freehold royalties, which is in effect the Canadian Franco-Nevada of the oil and gas space. Look at tourmaline. If you have a sense of humor for natural gas, which I do, and some patience, take a look at Birchcliff and take a look at Peyto. I hope I've given your questioner a wide range of opportunities across a broad risk tolerance. What you find is that in the, say, 2-year, 3-year period, between financing through construction, it is very common for companies that achieve nameplate capacity on time, on budget, to show doubles or triples in the 2 or 3 year time frame, which with much less risk than any comparable double or triple that one could obtain in the market. A simple view of the stock chart over the last 4 years of Equinox Gold tells you the importance of understanding the cycle. Equinox, very, very, very high quality company, is engaged in a $1 billion mine build in Northern Ontario. The industry's last 3 or 4 mine builds in Northern Ontario have been disastrous, which is to say, well delayed, double budget, and in some cases, never approaching operating capacity. What that means is that the market has sold off Equinox reflexively. I believe personally that Equinox will complete the hard rock deposit on time, on budget. And if they're able to do that at nameplate capacity, I think you'll get a double or a triple in the shares of Equinox at very, very, very low risk. I say this not to cause people to buy Equinox, but rather to give them the ability to understand the importance of knowing the development cycle and paying attention to it when other investors who they're competing with in the market day to day don't have the same knowledge. This is a circumstance which has rewarded me very, very, very well from time to time over the last 3 decades. And I would argue right now at the tail end of a 12-year bear market in sub-billion market cap miners, that this knowledge is particularly appropriate because the reduced risk isn't being properly addressed in the market. And there are lots of development stage companies relative to the market cap enjoyed by the sector. So I think it's very timely. I think it's very necessary. But understand that tomorrow will not be an entertainment product. Tomorrow's product will be for those who seriously want to gain knowledge so that they can improve their investment performance.
Your education in the world of metals doesn't end here. Subscribe, hit the bell, and stay informed. Engage with us in the comments and let's build a community dedicated to financial excellence. Until next time, this is your guide in the world of economic possibilities. Stay tuned and stay curious for more informative videos of economic experts. Thanks for watching.